Welcome back, traders and investors. We have a special guest on the line, Blake Morrow, Chief Currency Strategist at Wizetrade. Blake, how you doing on this busy morning?
I'm doing great, Joel. Thanks for having me. And it is a busy morning in the currency market, that's for sure.
Yeah, before we get to that, could you just give us a little bit of your education and market background?
Yeah, I started in the business in 1996, and I actually left college to be a stockbroker. After that, I started trading in 90. I started trading in 96 as a proprietary trader. Opened a brokerage firm with a few traders in Dallas in 99. We sold it to Wizetrade in 2002, and I've been with the company ever since. So.
And have you always traded currencies, or you traded other things as well?
No, I started my business was really originally in equities, and I started trading equities through the mid 90s and all the way till 2002. Once the spot market was available to traders here in the United States, I started trading currencies, and I've been trading that ever since and providing analysis to traders, thousands of traders globally since then.
Once you made a transition, how long did it take you to be consistently profitable? And you don't necessarily have to give us a dollar amount that you perhaps went a little bit red, but how long was the learning curve?
Well, the learning curve actually wasn't that bad. And I've always taken the approach that once you know how to trade and once you know how to risk manage, it's really just more learning the specifics about the market, the nuances of the market, if you will. And in the FX market, the biggest issue that I've always seen is that you get a massive amount of leverage, but you don't have to use it. And that's the one thing that I try to tell people is you get all this leverage, and people say, "Wow, that market's so scary, moves so wildly." And I'm like, if you take away the leverage, it would be the most boring market in the world. So you apply a little bit of leverage, and you get some good volatility in the market. And just being able to manage it is the most important thing. But that's true with any market you trade. So I don't think the learning curve was that bad at all.
Okay, once you get established in trading, and so what are your time frames? Are you in there scalping bips, or are you more of a long-term swing trader positioning? Or a lot of times when I ask people that question, it's like, and a lot of times I get the same answer. The longer I'll trade in a trade, the better, because that means it's going your way. And is that the same with you?
I don't necessarily agree with that. I do tend to be a little bit more longer term, but here's the reason why. The currency market is a great market. It's probably, well, in my opinion, it's the best market out there, but it trends a lot on macro themes, if you will. So when a macro theme takes hold, the trends tend to persist and they tend to last a long time. So the key is not getting stopped out in a trade while it's trending in your direction. So I tend to take smaller positions, wider stops, and be able to take the swings in the market, because the swings aren't really not that big. Like I said, if you don't apply too much leverage, the reason why a lot of retail traders get in trouble in the currency market is they tend to apply way too much leverage, but it's available to them. I mean, it's like, I've never shot a gun. Here's a bazooka. Have at it. I try not to take that approach, if you will. So I tend to be a little bit more longer term, and I think a lot of that has to do with me establishing certain biases in the market based on macroeconomic themes in the market.
Well, we definitely got some macroeconomic news today with Argentina, and what are you seeing in the currency markets now, and has this affected any of your positions?
It really has. Well, first and foremost, I was a little. I've been long the dollar for the last couple of weeks, and most of our traders know that we've been establishing long positions, and the dollar nudged right up against some pretty key technical levels yesterday, and it is this morning. I took all my profits actually yesterday. I was a little concerned with what might happen with Argentina, but typically the Argentinian news might have some sort of knock-on effect in the currency market, just from a risk aversion standpoint, where the dollar might benefit, which would have been a tailwind to my positions. But at the same time, when you're dealing with a country like Argentina, you don't know, and you don't have all the specifics, and it's way above my pay grade to know exactly what's going on the ground in Argentina. But it's a very volatile situation which could swing either direction, and that is creating a little bit of risk aversion, obviously, this morning. And the dollar is reaping the benefits of that. But also, if you take Argentina out of the picture, the fact of the matter is, if you take a step back, you have the Federal Reserve, which is in essence tightening monetary policy, where you have the ECB and the Bank of Japan, which is loosening monetary policy. And so that divergence between those two central banks, or those three central banks, is really what's behind the dollar's rise in recent weeks and probably the next few months.
Okay, all right. So are you down in Dallas? I know you mentioned you had a brokerage firm there. Is that are you somewhere else?
Yeah, we were in. I was in Dallas for 13 years. We opened our doors at this company called Centerpoint Capital and LiquidTrader Technologies in '99. After we sold it to Wizetrade, the Wizetrade headquarters is in Dallas, and I was in Dallas for many years. But because of, technology has allowed me the flexibility to do my work as an analyst from home. So I actually moved back to Scottsdale, Arizona, where I'm originally from.
Okay.
And I do, and I work actually, remotely, as a lot of traders do. Yeah, you had one of my good buddies, Greg Michalowski, on the other day, and him and I we only live a couple miles away from each other. We grab a beer from time to time, and he's the same way. He works remotely now out of Arizona.
Okay, the reason I ask is because if you're trading the currency markets, I mean, money never sleeps, and is it something? I mean, how do you manage, your trading day, your time, with the markets, or are you in the positions longer term? So these, the fluctuations in the middle of the night or early morning hours really don't affect your outlook.
Well, Joel, that's a great question. The worst part about working towards the West Coast, or not being on the East Coast or in Europe, is the lack of sleep, because I actually get up at 3 o'clock in the morning when I start my analysis process at 2:30, 3 o'clock in the morning. But my as far as managing positions throughout the course of the day, the majority of the volatility happens in Europe and in Asia, or excuse me, in Europe and North American trade. So once we wrap up things here once New York closes down around 4 or 5 o'clock in the afternoon, that's usually early in the afternoon here in Arizona, so things
Right.
kind of slow down. And I can manage my positions in Asian trade pretty easily. So.
Okay. All right. No, I'm just curious because we've had some other foreign currency traders on, and they kind of echo the same sentiment. So, just getting just focusing on the Fed right now. Decision yesterday. I mean, basically everyone is bullish. Has been bullish the market because of a low interest rate environment. They're trying to taper a little bit. Could you give us your short term and long term outlook for U.S. interest rates?
Absolutely. As far as interest rates go, I've and I've told our traders this for the last 6 months, the last year. I really don't think the Fed's gonna. It's gonna be more of a mechanism of how they raise rates, if they're ever going to raise rates. One of our good friends, Kevin Ferry of Kronos Futures, he was on some of my broadcasts, and he said, no central bank has ever exited quantitative easing, and so what's going to be the biggest feat is how the Fed's going to do it. And I think the Fed's going to have a lot of, I call them fits and starts. So, we're probably going to threaten to raise interest rates. We might actually, the Fed might actually start to raise interest rates in mid-2015, as a lot of economists see. But how the economy takes that is the real question. How the markets respond, and how does the economy respond to that? And I think the Fed's probably going to raise rates, lower them again, maybe induce some more quantitative easing. I think we're going to be doing that for quite some time. That'd be my longer term view. Near term view is I think the Fed might actually move the goalposts up a little bit as far as interest rate expectations, especially if we have a really good job report this month and maybe next month. If we get that slack and the labor force doesn't really show up, and the jobs report looks strong and inflation continues to tick higher ever so slightly, the Fed might actually move up those expectations. You might see rates in the near term rise a little quicker than the thought. And I think the dollar is reflecting that right now.
Yeah, I mean, you think about it. I mean, the rate the economy is growing, they really, it's precarious. They can't, pull the rug out, and on the other hand, they can't keep going at the rate. So it's difficult. I agree with you. I think up and down. I don't think there's ever going to be any big spike unless you get some major inflation, and they'll see if they can just kind of like do the backstroke and get themselves out of this situation. Well, we're gonna
Yeah.
go. We're gonna go here, Mark. S&P's just opened down 18 points and just smashed the pre-market low here. So we're gonna talk a little bit about the market. But thanks for coming in and talk about the currency market. And we'll certainly like to have you on again.
Thanks for having me on, Joel. I really appreciate it. Have a great day, everyone.
Okay, Blake Morrow.